Welcome to Dan's On Site with Dan Dutton and Dan Goley, a podcast and YouTube show dedicated to all things real estate, delivering market information, interviews from all perspectives, and tips for everyone involved in or interested in real estate. We'd love to hear from you. dans@dansonsite.com. Welcome to Dan's On Site, our third episode of our mini episode series. Today we're talking about the multifamily market, specifically investment perspective on the multifamily market. And we're joined here today with Peter Frei. Thank you for joining us, Peter.
Thanks, Peter.
Thanks, guys. Appreciate it. Love what you're doing here.
Thanks. We appreciate that. Hopefully you're one of our 6 viewers.
Yeah, I have been.
Six.
Actually, I bet I'm one of the 2 out of 6. Sometimes I refresh. So
Nice.
Oh, nice.
Nice. That helps out helps out our ratings. Mm-hmm. So how is the multifamily market performing currently? Has low interest rates on homes had a significant effect or not?
On the interest rates, I don't think it's had necessarily an effect on renters yet, because that takes a while for it to kind of cycle through. But the multifamily market has performed okay, mostly because of government assistance with the PPP money and any sort of extended or incremental supplemental unemployment benefits,
unemployment stimulus, all that.
People are able to afford their middle low income apartments, because that's generally the profile of renters who work in maybe the service industry or something that's been affected by COVID. That they're still able to make rent payments, and with you're not able to evict people right now. They're staying fuller longer. So apartments have been steady. I don't think rent growth is growing like crazy. But when all this PPP money runs out and the unemployment benefits, are kind of drawn back, that'll be interesting to see what where evictions go, where vacancies go. But the other thing is, most of these are, like I said, are middle, lower income, rental profiles. There's nowhere else to go, right? They can't go downstream to a more affordable apartment, because they're usually at kind of the bottom end of the affordability spectrum. So they'll have to work with landlords, because landlords will have to work with their tenants to keep them in there.
When you're looking at, we've kind of looked at the retail sector, where some people are investing is, are they Class A, Class B, where are they located in the market? We've talked internally about some office. You always hear the CEO of an office wants to be close to his house, and how we talked about this submarket in our previous episode, how there was a 80% leased up office market through the area. What are some of the fundamentals from multifamily? Do they look at a sector of town? Is it a piece of ground maybe that's less expensive, that the entry is less inhibitive moving forward? I mean, what are some of the basic fundamentals from a guy that's
if you're looking to invest or develop, what are the main things you look at? I mean, it's kind of the number one rule in real estate is the location. I mean, that's kind of where you start. Where do you want to be in town? Where do you want to develop in town? And that's all based on, you can look at schools and crime and access to transportation and jobs and shopping and whatnot. But it's that all feeds into where the rents are at. And that's going to be your number one baseline for where you want to invest in. The rent, if you're buying an existing building, the rent roll is the number one thing you look at, and trying to find where the actual rents are. A lot of times, brokers, for better or for worse, when they're marketing properties, can kind of fudge different NOI numbers. So when they list a property at a 7 cap, usually it's not. Usually that number is based on sort of pro forma rents with pro forma expenses. So you really want to dig in and see, how is this property really performing? How much income is it actually spitting off, the NOI, today? And then from there, you can make a better assessment on where you think, is that NOI going to grow, or is there more risk to it that it might stay steady or even decline?
So how are sales performing? How's the multifamily market doing sales-wise throughout the first half of the year? But then I think, really curiously, how they performed the last 3 months.
Mm-hmm. I think, I can mostly speak to Omaha, but they've pretty much stalled out. There's been some sales that were kind of in the pipeline pre-COVID that I think went through and kind of survived. But the main issue is kind of a gap in expectations. If you're a seller, let's say you own an apartment building, and the market was hotter than ever 8 months ago. There was a ton of buyers, and crazy pricing. If you weren't a seller then, why would you be a seller now, right? For
sure.
Why would you test the market? You still think it's worth, what the price per door that it was 8 months ago. So your expectation is that or higher. Why would you sell? because any buyer coming in with all this stuff we just mentioned, with unemployment benefits maybe being pulled back, there's so much uncertainty around where rents are going to go and where vacancies are going to go. So with uncertainty comes a higher level of risk, and they're going to want to compensate that by having a better return. So bringing down pricing. So there's a gap between what the sellers still think is 8 months ago pricing and what the buyers are now COVID with the added risk. There's a gap, so that's leading to kind of a stalemate in the market in terms of sales. I think that's pretty much nationwide. It's going to follow that same trend. But because Omaha is a 150 to $180 million a year multifamily market in terms of sales, and sales were pretty strong in Q1, and then they've kind of pretty much. We'll probably have a record low in terms of sales this year, Omaha.
So Dan, I don't know about you, but we got to have Peter back. We really just touched the very top of the conversation. So Peter, if you would, maybe come back in a month. We'll do a full episode, really dig deep into investing strategy, what you look for in the multifamily market in total.
That'd be fun. And then maybe we have a little more answers on all this COVID stuff, what's going on.
Yeah,
a lot of it we just haven't seen, funnel through the market because it's so new.
Well, Peter, thank you so much for being on the show today. We really appreciate it. As always, Dan's on site, Facebook, Dan's on site, all your podcast platforms, YouTube, of course. If you have a question about multifamily investment properties in general, have a story. We'd love to hear your stories. Contact us at dansonsite.com. As always, that's right. As always, Dan Goley.
Thank you very much for being here.
And I'm Dan Dutton. Thank you, guys.
Thanks again for joining us. Find us on Facebook, at YouTube, Dan's On Site. All your favorite podcast platforms, Apple Podcasts, Spotify, Google Podcasts, and more. We would love it if you hit the subscribe button and also leave us a review. Reach us at dansonsite.com.